Hello, and thank you for joining me in this session. My name is Andi Haswidi. I'm the head of Asean Research at DealStreetAsia. In this session, we'll be focusing on investment opportunities and challenges in Indonesia. Our theme for this session is, will PE firms chase pandemic-proof bets in Southeast Asia's largest market? Before we start, please allow me to introduce my esteemed panelists for this session. We have Pak Rachmat Kaimuddin. It's an honor to have you, Pak. He's the CEO of Bukalapak. Pak Kaimuddin is a seasoned leader with a cross-field and industry background, including experience in engineering and financial management. Before joining Bukalapak last year, he served as Director of Finance and Planning, as well as Commissioner for Bank Bukopin. Pak Kaimuddin is an MIT graduate and holds MBA from Stanford University. Our next guest is Pak Stefanus Hadiwidjaja. He's the Managing Director for Creador. Pak Hadiwidjaja has been with Creador since 2013. And like Pak Rachmat, he's an alumnus of Boston Consulting Group. Hadiwidjaja is a Fulbright scholar. He holds MBA from the Wharton School at the University of Pennsylvania and a graduate degree in industrial engineering from Universitas Pelita Harapan. Our next panelist is obviously not a stranger to among PE firms, I would say. He's Pak Sunata Tjiterosampurno, Co-Chief Investment Officer and member of Investment Committee of Northstar Group. Pak Sunata has been with Northstar since 2006 and overseeing the company's growth since the beginning, and now one of the most influential PE firms in the region. Prior to joining Northstar, he was a director at the investment banking division of Dana Reksa Sekuritas. So welcome, everyone. Thank you so much for joining this panel. So let me begin by highlighting what has been happening. One of the big takeaways from this pandemic period, obviously, is that it has accelerated the digitalization of human activities, and businesses that have embraced digitalization prior to the start of the pandemic have benefited from this sudden surge migration into the digital. And the biggest benefactors include e-wallets, telemedicine companies, edtech. I mean, most of the verticals are, mostly tech verticals here that we're talking about. So what does this mean for PE firms when growth is actually happening here? Let me start with you, Pak Sunata. My thinking is that Northstar is a big believer in tech, I would say, and often comes up as an early mover. So tell us, what new opportunities are you looking at in Indonesia at the moment?
Yeah, thank you. I think the current pandemic, this is a special time, and it's create these allocations of growth across various sectors. As you said, digital, some digital players actually comes as a winner, but not all, because it depends on which sector they actually operate. Right?
Yeah.
I guess I think for those digital companies that benefit, is obviously they would see a very strong growth. We've seen it with HelloDoc. We've seen it with Zenius. As you know, HelloDoc is one of our co-ventures actually invest in HelloDoc. Zenius, we invest in Zenius, right, which is an edtech, right, and we are seeing a very strong growth, right. But that is not to say that other non-digital companies also all bad, right. In fact, there are exciting opportunities as we speak now to actually invest in non-digital sector as well, right. I guess the questions is that, earnings going to be bad in 2020 for most of the companies, right? But people is actually looking at 2021 and forward now. So in the beginning of the crisis, in March, right, people is actually worried about what's going to happen, right? But as we learn from, over time, right, through multiple crises. I mean, I've gone through crisis 3 or 4 times, right? And the worst one to me was still Asian financial crisis. And sometimes crisis end too soon before we know it. So while we are actually in the crisis, it's also very good opportunities for PEs and VC firms to actually really look at the opportunities and take advantage of it as well.
So I mean, you mentioned you've seen at least 3 crises like during your time, what's different now, and what strategies you think that will come out of this?
The difference is that in previous crises, like take Asian financial crisis, right? It was actually macro driven. So it actually hits directly to the balance sheet of corporates, right? And it's creating an over leverage situations. So in certain situations, it's gonna become a sudden death because the banking sector also collapsed, at least for Indonesia. The current crisis is actually not starting from that. The current crisis is actually starting from supply side. Supply side, meaning that with all the restrictions, lockdown, etc., right, is actually curbed consumer demand. But the balance of many of the companies are still relatively strong, right? Of course, if this situation is prolonged until 2021, then it will lead to the same effect, right, to a certain extent, right?
Right.
But that's a major difference, right? So the questions that we always ask ourselves is that, is this a short-term disruptions, or this is actually a structural issue? Right? And we need to understand that, because short-term disruptions, yes, if the company is actually difficult in the current time and they require partner to put money or to grow their business, we are do it, right?
So when does this become a structural issue? I mean, how do you know? What indicators are you looking at?
Well, structural issues could be good, could be bad. Like, for example, if you're talking about digital payment, right? I think the leap forward in digital payment is actually already happening, even pre-crisis. But with the COVID crisis, is actually the adoption is getting stronger, right? So that is actually a structural change in terms of payment, right? Whereas, for example, other businesses is a short-term effect, right? Retails, right? Of course, sales drops in the second quarter, rebound a bit in the third quarter, right? Maybe fourth quarter continue to rebound, but is more of a short-term disruptions in my view, right?
Right. Okay. Moving on to you, Pak Stefanus, Creador is perhaps less exposed to tech and more towards consumer and finance. What have you seen so far in terms of data from your portfolio companies, and what are the new opportunities right now for Creador?
Okay, sure. I think continuing the point from Pak Sunata, I think I completely agree that the business will eventually recover, and actually we have seen it start to recover quite well, right? And then even in sector like retail, which is one of the sector that we have the largest exposure, the recovery is actually faster than what we expected in the beginning.
Okay, what sector is this one?
We have exposure in home improvement retails, for example. We also have pharmacies, So the improvement is actually quite fast. And I mean, in general, obviously different sector will have different recovery time, like travel and landing probably will take more time than the other sectors, right? But I believe with what Nata mentioned about this is not a structural crisis. When things are back, the business will recover quickly. And also for us, yes, you're right. We are not as exposed as Northstar in the tech sector. Yeah, and we look into selectively into the opportunities in the space, but we also explore what we call the derivatives of this digital boom, right? For example, the sector like the data center, data analytics, or data
Okay.
payment, logistics. These are all the derivatives of the digital boom. These are actually some what we call a new sectors that we explore recently. Back to your question on what is our own experience in regards of our own portfolio. A few things. First, we also have packaged food business, and at the end of the day, we believe people still need to eat and drink, right? And then even during the pandemic, our business are still growing very well, really very close to the target that we made last year. So we are quite happy with that. On the retail, we definitely get impacted quite bad in the second quarter when there's a lot of lockdown,
Sure.
and we have a big presence in malls all over.
Okay.
So if
Yeah.
malls
Yeah.
close, then there is no business, right? We start to open in the standalone, but it's a small percentage. But when the mall opens, obviously the traffic's down compared to pre-COVID. But I guess we have disproportionate shares among the traffic that's coming to the malls itself. So the recovery is quite good. And even in, I can share later, the same retailer in Malaysia, the recovery is really a V-shaped recovery, which surprised us.
Okay. Yeah, there's been a lot of questions on what's going to happen to malls, right? Whether or not what happened during the pandemic is going to change people's behavior fundamentally. What do you think, Pa?
Right. I mean, yes. We so far at this point, we see that traffic coming to the malls are obviously lower. I would say in bigger city is probably lower compared to the smaller cities. So ranging from down by 40-50%, and probably in outer or smaller city down by 20-30%. I mean the traffic to the malls itself, right? So as a company, our strategy is also try to expand into more standalone, which I think a lot of retailers also think the same, right? The F&B retailers, I think when I talk to people, the future plan is more like not depending too much on malls.
Okay.
That affected to all of this. And I think also people want to be more efficient, right? For us,
Okay.
let's say before we have a slightly bigger store size, we try to be more efficient. You know, we really want to stock the product that really fast moving, a smaller space, and hopefully the turnover itself will not be affected that much. And I also talking about a lot of the F&B retailers with the growing of the cloud kitchen and else, right? So having that retail outlets is probably not super necessary compared to before.
Compared to before, yeah.
Because of the booming of the delivery and all that. So these are some of the strategy that we try to accommodate as well as what I heard from the market itself.
Okay. Pak Rachmat, e-commerce is clearly witnessing a surge of activities from this rapid transition to digitalization. Yeah, I mean, as a company that is growing, what do you expect from investors these days? I would assume that businesses that outperform have a more have more options to choose strategic investors rather than just for the sake of capital. So, and recent investment from Microsoft, obviously, I mean, brings just more than just capital for you. So what do you expect from investors these days?
First of all, I think this pandemic, if you say we grow quite strong, I think that as a sector, e-commerce grows quite strongly, but e-commerce has been growing as strong even the previous years. I think I guess the good thing is that the thesis of our business is that commerce is very fundamental for people's lives, right? And then and it's kind of something that we are very, very grateful in Bukalapak that, it's proven, even though we have this very big pandemic and kind of crisis, we still see the growth. Yeah. I mean, in the end of the day, for us, having investment is quite important because we are still growing, right? We still have grow quite significantly. We still need to build infrastructure. We need the capital to build that, while also trying to find, going towards that path of profitability that everyone is trying to do. And of course, when you're looking for investors, money is money, right? Like the other thing is that what do you see? Do you see any kind of like additional responsibilities or additional synergy that they will ask? Yeah, and I think for us, we will see whether Bukalapak has been quite focused. We want to be an e-commerce platform. We want to serve the small and medium enterprises. We want to serve the people outside the commercial centers, and our focus is in Indonesia. So of course, when we are looking for investors, we are looking for the type of partners that will support us toward that focus and mission. So whether they bring technology, whether they kind of bring payment system and or network, whatever, those are what we're looking for.
All right. So you mentioned Bukalapak is razor focused like on e-commerce, but you are, I mean, being in e-commerce means that you're involved in multiple business verticals. I mean, you have investment products and other services. Basically, what are the numbers telling you so far? I mean, during this time around.
Yeah, I think our thoughts is basically we call it 2-in-1 platform. Yeah. So one is our C2C online marketplace, and now our B2C or B2B offline to online. So online to offline, O2O business, right?
O2O, yeah.
And those are our ways to basically serve our customers. And of course, when you deal with business owners, with merchants, and even with buyers, you see flow of cash, you see flow of payment, and sometimes there will be an excess of cash, and sometimes deficiency of cash. And if they are deficient, then we work with other people, with financial providers, for example, with banks. Is there anybody want to provide working capital for our merchants, for example? And if they have excess of cash, and of course, we are providing them with opportunity to invest their money prudently. So we look for asset managers or gold, for example, investment products that I think people will like. So I mean, I would say overall, yeah, the transactions going up. Our let's say online marketplace, and overall it grows quite strongly, but what people buy is shifting quite interestingly.
Okay.
So typically, if people typically buy, like, and I'm talking about general, yeah, not only physical goods. The top 5 will be fashion, and then phone and accessories, then personal care, home and office, and the last one used to be electronics. And now we see fashion drop slightly, handphone drop quite significantly, double-digit drop in the teens. Yeah, personal care goes up. So this is the vitamins, all that kind of stuff, right? People care about their health more. Home and office, I think it also goes quite high because people work from home now. They buy stuff to make them comfortable. and electronics drops quite significantly. Now number 5 is food.
Okay.
So food and beverage now become it grows almost double actually in this pre-pandemic era.
Yeah, I noticed a lot of e-commerce platforms right now is entering food delivery, right? I mean, Shopee, yourself, and Tokopedia, obviously. Is this the next battle for you guys? Are you trying to challenge Gojek and Grab in their turf?
Oh, I mean, obviously not. Yeah, we are providing different services, I would say. This ride-hailing, the food delivery that is done by our colleagues in ride-hailing is basically providing instant service, right? Basically, the driver go pick up and deliver. And for us, I think we are a marketplace where people can sell anything, right? And we need to still work with the logistic players, including the ride-hailing, to deliver the goods. So I think it really it's very different type of services. Yeah. If you want to buy something that smaller value, but you want it right away, then probably you get it from the food delivery. But if you want to buy something maybe bigger volume, you're okay to wait a little bit. Then because now you can pay kind of easier to pay with in marketplace versus the Gojek, for example.
Of course.
Because they carry limited cash, something like that. Yeah.
Yeah. So one of the things that Pak Rachmat mentioned is growing demand for how basically more household spending on home improvement products and appliances. I guess people are staying at home more rather than traveling, right? So they try to beautify their homes. So my question is for Pak Stefanus, actually. You have one of your portfolio company, Mr. DIY, obviously is focusing in that sector, and I assume it's a big benefactor as well. Can you tell us more about that?
Yes, sure. True that Mr. DIY is one of our largest investment today, and we have Mr. DIY not only it started in Malaysia, is the largest home retailers in Malaysia, but we also help the owner to open in other markets. First in Indonesia, in 2.5 years now we already have 200 stores, close to 200 stores all over Indonesia, and that we help them open in Philippines, and we also have opened in India. So we put a lot of money in this space, and lucky enough, this is a space that, although it's unfortunately in retail and it's offline retail, not like Bukalapak, but they're still doing very well. And especially in this situation of pandemic, yes, it's true that people spend a lot more time at home, so there's a lot of demand on many other anything related to home. So we see, as I mentioned to you, for example, in market like Malaysia, we see a V-shaped recovery. Once the lockdown is completed, the business actually recover very fast in a matter of few weeks, and the performance actually slightly better than pre-pandemic.
Wow.
That's also the reason that we continue our process to IPO the company, and thank God that last month we managed to IPO the business in Malaysia. And,
what's the valuation right now? Market cap.
Yesterday I checked. I mean, is very rich valuation. Now it's at $4 billion. But I think a lot of investors see a future, a good future of this sector. And in Malaysia, actually not many growth stocks basically. So this company, even in a country that is much smaller versus Indonesia, we're still adding 10 stores per month pre-pandemic, and then after the pandemic, we'll probably will continue to do so, and the growth has been very well. So we are happy with that, and that's a good learning for us to see how the market recover very fast. The market like in Indonesia, the recovery is also good, although it's not as fast as in Malaysia, given that a big presence in malls, right? What we do also, we try to combine with doing like jasa titip. For instance, we also have launched our online business through platform like Bukalapak, Shopee, and Tokopedia.
Does it have a name?
Yeah, although all in all is still a small part of the business, right? I mean, for this, somehow people are still want to visit the store. If you, what I learned, I think even a company like Ace Hardware, the online business is still a much smaller part of the overall business, right? So
right.
hope is now that the traffic is coming back to the malls, and at the same time we start to opening up more in a standalone store. In the past a few months, actually, the performance of standalone store is 2 or 3 times better than the mall's performance. So people, it's the goods. They come to the store. If it is accessible, the only issue is if it's in the mall and people try to avoid the malls, then really optimize our sales. But I think as Rachmat mentioned, it's interesting to see that in the online platform, home improvement goods become the top 3 or top 4 of the main purchase.
Right. So I want to go back, just talk about valuations a bit. I mean, this the view is obviously there's been a lot of discounts in the market. So, Sunata, are you are you benefiting from this? Are you making investment because of lower valuations right now?
Well, two things, right? Obviously, if we can get in at a lower valuations, that is actually a plus for us, right?
Of course.
But at the end of the day, I think the bigger questions is that what is the medium-term outlook of the business, and whether the business is going to emerge stronger post-pandemic, right? And we are seeing quite a few interesting situations. I think what Stefanus mentions about the derivatives of the digital play, right? So if we scan the market, right, you see there's what we call the new normal play, i.e., health tech, edu tech, entertainment, etc., right? Sports related. But there is this what we call also connectivity play, which is all the payment, logistics, data center that supports, right, the growth of the digital companies. And they are champions, right? Champions is actually all the existing companies that the business might be impacted given the crisis. But given that it's a difficult time, good players will actually emerge stronger post-crisis, because they have a stronger balance sheet, they have a good distributions, they have a good brand name, and they can capitalize while others are actually busy in terms of fixing their operation, right? And the last one, now of course in a distressed situations, then the valuations will be a discounted valuations, right? In other sectors, right? We just have to look at the earnings, calibrate the growth, right? And it's just a negotiations at the end of the day.
So the question is really about whether or not this economic slowdown will reach sort of like an inflection point, or a point of where things will turn much tougher. What's your prediction?
I think things will actually be better, right? If we look at the public market data, and with the stock market is actually keep going up and rallying, right? There are two things obviously. One is actually liquidity, right? So it's just a liquidity play. But the other thing is actually expectations of things will actually go back to some form of normalcy in 2021, and then continue to recover in 2022, right? So the market is pricing that. we as an investor is also pricing that in terms of making an investment, right? So I'm actually, you know, quite optimistic for 2021, right? But the recovery, I think we have to be prepared also. The recovery may not be, depending on the situation, may not be as fast as we like, right? But I think, but I think 2021 shouldn't be worse than 2020.
So by recovery, you mean going back to 2009 pre-COVID levels?
For other business, it will be even higher. For some part of business, it will be maybe 70 to 80% because it takes time. So I guess I think as I said earlier, because this current crisis is creating these allocations of growth very fast, right? And to return to the normal period, right? It requires sometimes as well, right? The shock is actually happens very fast, but I think the recovery will take some time. But I'm optimistic that 2021 things will recover.
Pak Rachmat, obviously, I mean, Bukalapak has its fingers on, you know, the pulse of the consumer market. What's your predictions in terms of outlook? Indonesia's finance minister said recently that, you know, this crisis may push back developments. By developments, she was referring to, you know, poverty levels and expansion of middle class by a decade. What do you think?
Yeah, basically the problem with this crisis is that it really hits everyone, right? So in 98, maybe like in 2008, typically it hits the financial sector, but the small and medium enterprises is actually going strong. Yeah, in this current crisis, I think it hits everyone, and maybe even you can argue especially the small and medium enterprises.
Okay.
But in different ways, yeah, in different ways. The way what we see in our platform is that you see some winners and you see some losers. There are guys who actually selling something that is now the demand is much higher, and there are other guys who actually sell something that the demand is lower, and people need to shift quite quickly, right? And you also see people who are so used to working offline, and maybe for lack of better term, they're in denial. They're just waiting for things to be normal again, right? So they waited 1 month, 2 months, 6 months, and whatnot, and maybe those normal time is not gonna happen. And I think so. Yeah, those are human nature, and that could be an issue. And you know, we are trying to do as much as we can. Government, I know, is working very hard as well to try to solve this issue by basically educating people to go digital as much as possible. If you're talking small and medium enterprises, at least the number pre-COVID, they said only 1/6 of the business has been digitized or using technology. And those those guys that are not yet digitized will probably suffer. So, but that being said, yeah, if we, I mean, come back to what Panata and Pak Ade said, yeah, if I'm paraphrasing, people will always consume, right? People will still need to move on with their lives, and some sort of recovery is going to happen as long as, you know, as long as we are still alive, right? We are still doing some activities. But yeah, the idea is if some of the guys, the people who actually can shift and adapt to this new normal will be the one winning, and they're the ones that not kind of like in denial will probably suffer from this, and maybe overall impact it's yet to be seen in this one.
Right. So you mentioned a bit about the, you know, the policy sector from the government. We have seen, you know, current administration, doing a lot in terms of investment in infrastructure as well as bureaucracy reform recently with obviously the the launch of omnibus law. Have these reforms actually translated to, say, a lower cost of doing business in Indonesia or certainty of regulations? Maybe you guys can comment. Maybe Pak Rachmat first.
Yeah. If you're talking about the hard infrastructure, maybe it's still too early to tell. Yeah. I mean, I think we all benefit from the new toll roads, the airports that was being built. But the idea is that because it's hard to compare because we don't travel as much now. Yeah.
Right.
But yeah, well, if you talk about now, we can go to Semarang in 5 hours and and all that. I think we all hear it, but
yeah,
the fact that we are not in normal traffic, so it's harder, especially also with the omnibus law. But I guess the signaling of that is, I think the government are willing to take very, it's kind of like make a position to make it easy for the investors, for the economy to move, and I think that is a good signal.
Right.
Yeah.
What are you seeing, Pak Sunata? Has things improved for private capital investment?
Yeah, I think, look, I think the infrastructure development definitely will benefit Indonesia overall, right? In certain cases, it will take times, right? But, arguably, logistic costs and movement of goods should basically improve, right?
Right.
And infrastructure development is not a short-term game; it's a medium and long-term game, right? And also on that front, it's actually very positive, right? And I think the omnibus law, everyone is actually eager to see the implementing regulations. But from a signaling and, as Pak Rachmat mentions, from a direction perspective, I think it will benefit a lot in terms of attracting investment and also even promote local investment, right? I think this is obviously, there are a lot of, pro and cons, right? But I think overall, it will actually benefit the investment climate and creating, a lot.
Are you saying it will take more time for, some of the reforms to finally bear fruit?
Some reforms actually take immediate, right? For example, now it's actually very easy to set up a PT, right? For example,
so that's happening already.
That, well, once they implement the omnibus law is a law, they need to put in place implementing regulations, right? Once the implementing regulations is actually completed, then we can see the benefit on the ground, right? And the benefit, some of the benefits can be short-term impact, while others can be medium-term impact, right? For example, setting up for a small business to set up company now is actually much easier with the omnibus law, right?
Okay.
So that's a short-term benefit,
right?
And also many other things.
Right. So as we approach our last few minutes, I want to touch on exit. So amid all of these, all the challenges, how do you see the exit environment getting affected? What's the outlook? Some say, exit is even more likely as businesses right now strive to achieve profitability faster as opposed to focusing on growth. What do you think, Pak Sunata?
No, I think exit, to me, the exit discussion is actually very particular on which sector and which company that we are talking to, because at the end of the day, exit is actually driven by the performance of such company, right? But in general, we have seen a lot of investment being made, right, in the past 6 months. But on the flip side of people making investment, there must be someone exiting as well.
Sure.
So I think both is actually continue to be, to be active, right? And, a lot of people in the beginning, just to put a context, you mentioned about, recovery, etc. I think it depends on the starting point. When the COVID hit in March, right? A lot of people maybe some might feel that, okay, this is a 3 months thing, this is a 6 months thing, right? For us at Northstar, we basically say that, look, we have to look at between 18 and 24 months, right? When Indonesian GDP was still at 4.7% and then revised to 3%, we basically said, I think GDP this year is going to be negative.
Negative. Yeah.
So we are not surprised if the GDP is actually negative, right? Because of the big challenges. I mean, this is a global crisis, right?
Yeah.
But we do expect that actually next year things will actually get better, right? I think the key point is that we just have to be taking a longer term view. And sometimes it's actually being conservative, but right. We have to understand and differentiate, as I said earlier, which one is actually short-term disruptions, which one is actually a structural change.
All right. Pak Stefanus, I know Creador is in the process of securing an exit, as we say, and obviously you exit Cimory last year. What can you tell us about the exit environment in Indonesia, and what's your expectation?
Okay, I think the first point is that demand for the high quality asset in this region and Indonesia is still very high, right? So I think the quite similar point to what Pak Nata mentioned is depend on the companies, right? Those companies that we think are doing well and running at their full or close to their full potential, and if it's the right timing, we have this discipline of exit. We have probably at this point we have exited half of our investment in Indonesia and quite some other countries, and particularly this year back to that point. So if you think the company is doing well and it's the right timing, then we run the process. So for example, we currently also running strategic exit of our packaged food business, and obviously the demand is slightly lower than, I mean, the interest in terms of bidder is slightly lower than what we expect at the beginning, but it's not of the condition of the business or other things. It's just, it's more difficult to do the due diligence, right? Particularly of foreign strategic buyers. But I mean, overall, the demand is still very good and we continue the process. Similarly, that I mentioned in Malaysia, we if it's because it's minority investment, then we run the IPO at the right timing. So again, the conclusion is high quality asset, the demand is still high. If it's the right timing and the company is doing well, then we won't delay the process. But there is some things that we have to fix first, and it's not particularly about our company. It might be the sector itself, for example, banking, right? We also have investment in a bank in Indonesia. We might as well wait and try to see the recovery.
We have 1 more minute. I have to end it right here, gentlemen. Thanks so much for this illuminating discussion. I learned a lot and I enjoyed it thoroughly. I hope our audience did too. And thank you. We'll see you again. So our next session at stage 2 will present Jonathan Larson, Chief Innovation Officer of Ping An Insurance Group and CEO Global Voyager Fund, in conversation with Eudora Wang. Thank you, gentlemen.
Thank you, Andi.
Stay safe. Thank you.
Bye.
Bye.